Thank you for tuning in. This is going to be a presentation on estimated taxes. I know, when you think estimated taxes, you think, my God, this is going to be a fun time. But it is an important topic and often a pain point I find my clients with, because most small businesses are doing it wrong. 60%, how do I get that number? I talk to my friends at the IRS, and 60% of businesses do not pay estimated taxes correctly. So this is a webinar that more people should be attending. But as I said, the purpose of this presentation is to help you understand what are estimated taxes. We're going to get to an agenda pretty quickly here, but some things, I'm going to turn on my camera so you all can see me if you want. So we're going to talk about estimated taxes. Feel free to put questions in the chat. If it's a very specific question, I might ask you to meet me or talk to me later, if it's about your specific situation. If it's a general question, then certainly I will tackle it during the presentation. Okay, a copy of these slides are going to be available. I think, and correct me if I'm wrong, Kelsey, I think we send them out automatically. I don't think you need to request them. And this webinar is also being recorded and will be available. And if you didn't know it, the webinars that we put in, we record them and we put them onto our YouTube channel. And here's the link to the YouTube channel. But not only that, this is what the YouTube channel looks like, right? So if you are a visual video kind of learner and you are interested in the videos that we do, then I highly suggest you hit that subscribe button on the top right. And what happens is when we put a new video up, you're going to get notified that a new content has been added to the channel. And we do a lot of these webinars. So we're getting a little popular, right, Kelsey? So the agenda today is, who we are very briefly, just so you know why I'm talking to you about this and where I'm coming from. Then we're going to get right into estimated taxes, what they are, when and how to pay, some tricks on calculating them, and then there are some exceptions to paying estimated taxes. And then I'll have the last pages. Usually I leave that up during the question period, and it has a whole bunch of resources available. So again, you'll get a copy of those slides so you can have those web links that I have. Who am I and who do I work for? So my name is Peter Harriman. I'm the Portland Center Director and a Certified Business Advisor. I am hosted by the University of Southern Maine, and that is intentional because my organization, the Small Business Development Center, we try to provide no-cost business advising to Maine businesses, whether you're just starting out in business or you've been in business for a while. And I say no cost, it really should be no further cost, right? Because we're taxpayer funded, so you've already paid for us. So get your money's worth, okay? So hit us up if you have questions like estimated taxes, how to hire people, whether it be employee or a contractor, looking at your financials, doing a tune-up of your business, or let's say you're not even in business yet, you're trying to get into business planning or how to get financing from bank. That's our bread and butter. So definitely let us know. During this past 2 years, we've also been dealing with some of the most up-to-date issues that come across the business desk, like the EIDL, the Paycheck Protection Program, the Maine Economic Recovery Grant, the Community Development Block Grant, the Shuttered Venue Operator Grant, the Restaurants Revitalization Fund, and the LMNOPs of business that comes up that the government likes to do that you should know about. So we try to stay on top of all these topics. That's the point of having all those kind of acronyms put in there. It gets confusing, and sometimes you just, rather than surfing the internet, you just want to talk to someone. That's where we come in. And we have locations all throughout the state. So we are mostly doing virtual meetings through Zoom now, but we are very close to opening locations as far as coming in person, if that's what you want to do. So more than likely there is a office near you, hopefully within driving distance. So we do cover the entire state, and most of our advisors have direct business knowledge as far as they ran a business. So we don't only just talk the talk, but we walk the walk. For instance, in 2020, we had some accomplishments, and I put the asterisks there because we only count our accomplishments when we get verification from you. The default is that everything we talk about as an advisor and a client is confidential. So if you don't give us permission to count it or to say it, then we don't count it. So all these are verified and we got permission. So we got 2,956 clients advised, 514 jobs created or saved, 38 million in capital generated, 93 business starts, and many, 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 many webinars. We're soon going to have our 2021 accomplishments up because we're compiling them, but we have stayed very busy. If you are looking for advising, this is our website, and in the top right is that request advising button. So if you click that and fill out a short form, you can register and get advising. So again, if the internet is kind of bogging you down or you just have a question, you're like, man, I really need to talk to someone or run this by someone, request advising and hit us up. There's also not only the YouTube channel, but our website also has learning and resources on it as well. So you don't have to just go to YouTube. On there, there's webinars like this that you can sign up with. There's other videos that we have curtailed to business needs. So definitely check out our site as well. What we do not do is provide tax, legal, or accounting advice. This is kind of the disclaimer that I need to say, right? So during our meeting, I have probably encountered most of the pains and tribulations that you also have encountered running my own business or running a business with my wife. And so I understand what you're going through. I can give you some pretty good and honest information, just like all our advisors can, because they've run businesses themselves. But during our advising, I'll probably say, well, this is what my take is, but you do want to check with a lawyer or you do want to check with an accountant. And we're saying that because you do need to check with professionals, right? We are an advising service that's no cost. We should not be a replacement for the legal or tax services that you would want to pay for. With that being said, let's get on with the show. So what are estimated taxes, right? Estimated taxes are a pay-as-you-go system, right? So it's a pay-as-you-go. It's not a pay at the end of the year, pay-as-you-go. And believe it or not, if you're an employee and you've been working for someone, you've already been paying estimated taxes, right? And we call that withholding, right? So your employer withholds your estimated taxes from your paycheck and makes the payment for you. And it's all based on that W-4 form that you're doing, because that W-4 form gives your employer all the parameters to understand how much they should estimate to withhold for you, right? So the point of me saying this is, guess what? You've already paid estimated taxes, whether you knew it or not, if you're someone who has been an employee. Now, the taxes that are withheld are, the federal income, the state income, and those amounts vary, and we'll get to that because those are based on how much you make. The more you make, the more you pay. And then there's FICA, where 7.65% is paid by the employee and 7.65% is paid by the employer, right? There's a little catch there when we get to self-employment taxes, but the other portion that is on your W-4 is, do you want extra taxes withheld? And again, we're going to get to that section as well, because that is going to be an important section later on. So for a business, that was for an employee. For a business, you, as a business owner, have to withhold your own taxes and make your own payments, right? So as an employee, you get the benefit of your employer having to do it. Now, because you are employee and employer, you have the honor of withholding your own taxes and making your own payments, right? The taxes, again, are the same. You got the federal income and the state income, which again varies by where you sit on the scale, the tax scale, which do change from year to year. And then there's a more stable one, the FICA, the Social Security and Medicare, which for most small businesses is going to be 15.3%. Now, 15.3, if you notice, is that 7.65 plus the 7.65 from the previous slide, which was employee and employer portions. So you as a business owner pay both. So that 15.3%. So usually when we're roughly trying to give an idea to our clients about what kind of taxes they're going to be looking at, we roughly give them about 25 to 30% of your profit. Remember, taxes, taxable income is not your sales, it's your sales minus expenses. So whatever that profit is what you're taxed on, okay? Now, most businesses are going to be making 4 equal payments throughout the year, right? There are seasonal businesses that could make unequal payments, and we'll briefly touch on that. But I did look through the list of who signed up, and there didn't seem to be many seasonal businesses, but we will touch on it a little bit. And then farmers and fishermen, if you're out there for 2022, you only need to make 1 payment on January 17th, 2023. There was a special provision for this year, so you don't have to worry about the 4 equal payments for this year. But still listen to this webinar because you still want to know how to do it for later years. Now, one of the questions I always get from clients is, do I really have to pay estimated taxes, right? So there are 3 questions that you really need to ask yourself, and the answer to those questions are going to determine if you should be thinking about or you should pay estimated taxes, right? So first, do you expect to owe less than $1,000 in taxes? And again, remember, taxes are based off of the profit, not off of the sales. You could have $1 million in sales and $900,000 in expenses, or $999,999 in expenses. That means you only have $1 in profit that you're going to be taxed on, right? So do you owe less than $1,000 in taxes for the tax year if you take out any federal income tax withholding? So remember, withholding is when you're an employee. So if your business is a side job, is there enough taxes being withheld overall that you would have less than $1,000 in tax liability at the end of the year? If that is correct, that you think you'd have under 1,000, so maybe you're a very small business, then you're safe. You don't need to make an estimated tax payment. The IRS is okay if your tax liability is under $1,000 that you make the payment at the end of the year. The second question, do you expect your federal income tax withholding, so present 2022 for this webinar, you expect your federal income tax withholding plus any estimated taxes paid on time to amount to at least 90% of the total tax that you will owe for this tax year. So this is a little hard because you have to be very good at estimating what you think your profit is going to be for this year to understand if you have enough to meet that 90%, right? If you have paid 90% of what you think you're going to owe for this year, then you're clear. You don't need to make further estimated tax payments, right? It's kind of weird. In the question itself, it says plus any estimated taxes paid on time. So this one was a little tricky, but long story short, as I said, this one looks at the current tax year you're in. If you've paid 90% of what you will owe for that tax year, then you're going to be okay. This will get us on, let me just go previous. There's an important stipulation for farmers and fishermen. Sorry about that. Farmers and fishermen, rather than 90%, you guys can use 66 2/3, so 66.67, rather than 90%. So if you're a farmer or fisherman, you actually get a lower threshold that you have to meet. Sorry about flipping through that fast. The final question deals with your past. So that previous question dealt with the current tax year. This deals with the past tax year. So this one, and I know it's a lot on one page, but basically it's asking if you made under $150,000 for adjusted gross income, have you met 100% of last year's tax liability? Is basically what they're saying. If you made more than 150, then you would have met 110% of last year's tax liability. So this one, as I said, there's a lot to read there, but basically, if you hire an accountant to do your taxes, many times when the accountant does your taxes, and if you're going to keep that accountant and they're going to help you prepare for next year, the accountant uses this rule to help you with the estimated taxes for the next year. Now, this rule does assume that your previous year, that all 12 months you were working, your business was in operation, right? So if you opened halfway through the year, this one doesn't apply. You have to be in operation for the full year. But what an accountant will do is they will do your taxes for the year. And then based on those taxes, they're going to write coupons at either 100% or 110% of last year's tax liability. And they're going to give you those coupons and tell you, mail these at certain times, right? It doesn't mean you're going to pay all of your tax liability. It just means you're not going to get penalized in any way for not having paid estimated taxes. So they're basically using last year's tax liability as a gauge of, okay, this is how much tax we should expect. And then they're putting coupons or giving you coupons to say, okay, based on last year, this is what we can reasonably expect. Again, there's that stipulation of 150,000 AGI or less is 100%. And if you do more than 150,000, then you should do a little bit more. So you take 1.1, so 110% of last year's tax liability. Typically, if an accountant's playing it safe, they're going to do the 110%. So these three questions that we went through, do you have over $1,000 in tax liability, or will you have over $1,000 in tax liability? Is the current year, have you paid 90% of what you think you're going to owe in taxes, or from the previous years, have you paid the same as you did the previous year, depending on how much income you made, or did you pay a little bit more than 100 or 110%? Those three questions are the primary questions of whether you really need to pay estimated taxes or not, right? Sorry, I'm going to just move this up here. I got this thing in my way. So if this question, if you met this question, then you don't have to make estimated tax payments. Again, further estimated tax payments. Okay, so you figured based on those three questions that you have to pay, right? And most, I'll be blunt, most businesses that I talk to, they kind of understand that they have to pay. Most of them are kind of like, I know I should be paying estimated taxes. I just don't know how to, I don't know when. I don't know if it's really something I'm capable of doing. Well, you are capable of doing it. Remember, you've already been doing it if you were an employee before. So now you're just doing it in a different form. But the first thing that you're going to tackle is, when do you have to pay estimated taxes? And the first thing to tackle is, if you're starting a business, because I get this a lot, people will start a business in June, let's say, and by June, they've already missed a couple periods of which they would need to make payments. So they ask me, do I make 4 equal payments from June on? Or what do I do about those payments that I missed, those periods I missed? Well, you don't start paying the estimated tax until you start the business. So you start having income with the business, right? So if you started your business in June, then the period starting in June is when you're going to start. You only have 2 more payments that year. So you're going to spread your tax from June onward over those 2 payments. You're not going to add more payments, right? You already missed the 2, that's fine. And most of the payments are based on a calendar year, meaning January 1st to December 31st, right? So when we look at this calendar, this payment calendar, at first it looked pretty simple, but we're going to get into this. And this is why I think a lot of people end up giving up on estimated tax payments, because this calendar, when you really get into it, starts to not make sense. It really does. So your first payment is when you've earned income anywhere in the months between January 1st and March 31st. So if you made any kind of income in that period, then you should make an estimated tax payment April 18th. But with Maine, because remember, this is a Maine SBDC. I know many people might be watching this from other states, but the Maine SBDC, we're part of New England, and guess what? New England has Patriots Day. So the due date is actually going to be April 19th for us, not for other states. Sorry, guys. So if you had income in those between anywhere in that period, January to March 31st, then you're going to make a payment on April 19th. If you started your business in June, as I said, you're going to miss those first 2 payments, which is fine. You don't have to make up the payments. You just have to pay for June, for instance, the September and the January one, the next 2 payments. And those payments, again, should be equal, and they should match any kind of tax liability if you're making over, or you're going to have a tax liability over $1,000, right? Now, here's where it doesn't make sense. right? If we look at the second payment, it's only covering 2 months, right? And so we got the 3 months on the first one, 2 months on the second one, 3 months on the third one, and then 4 months on the last one. So that's where I think a lot of people get confused, is in their brains, everyone says, oh, are you making your quarterly estimated tax payment? And it's really not quarterly, it's more of a period tax payment, right? The second period tax payment, because it's not truly a quarter. The April to May, that June 15th payment is going to surprise you, because you would naturally think it'd be July that you'd make that payment, that you'd have January, February, March, April, May, June, right? But rather than that, you have this weird 2 month and 4 month schedule mixed in. So pay attention to the dates. The dates are important. You don't want to miss a date. And the dates don't necessarily make sense from a quarter standpoint. So get quarter out of your mind and just think of it as a period. So first things first, these are the days, right? And they're basically 15 days after the period, barring any kind of holiday or weekend, right? So these days will change next year, depending on where those days fall. So now that we know when we have to pay, how are we going to pay, right? And for the federal, the IRS has this great big website on all the different methods that you can pay your estimated taxes. But by far, the IRS very much prefers if you set up what's called an EFTPS account. It can be used by individuals and it can be used by businesses. So it can be used by both. And when I say individuals, I'm saying that because sole props and partnerships, for all intents and purposes, they're considered more individuals than they are as a business, because when they look at their taxes, they're attaching those as Schedule C's or K's, K1s on their taxes. So you can set up an EFTPS account on the IRS government website, and I will warn you, this account, when you set it up, they're going to mail back a 4-digit PIN number that you're going to need to log in to make your payment. So if you are watching this on the 7th because you are worried about the payment that's coming in on the 19th coming up, you are going to want to do this today to get that code in the mail in time so that you can make that payment. So the account does take a little time to set up. Do not wait till the last day. Now, if you are a sole prop or partnership and you do ignore me and wait till the last day, there are ways. There's something called direct pay. You can use your credit card, debit card, and brand new, you can use your digital wallet. Fees do apply for those last three, the credit card, debit card, and digital wallet. So you will pay extra for using those options. But direct pay is linked directly to your bank account, and EFTPS is also linked to your bank account, which should be a business bank account, by the way. So if you don't listen to me, that's fine. You don't set up an account. If you're considered an individual, you can certainly go in and do direct pay. Now, why I am hammering in on the account so much, the EFTPS, is because with an account, you can then look up your payments much easier. Otherwise, with direct pay or whatnot, you'd have to know the exact payment and the exact day that you made that payment to be able to look it up. Not impossible, but a lot harder. So with any of these, you're still going to want to print the receipts when you do that, the confirmation page. But lots of ways to pay the federal. With Maine, because remember the Maine SBDC here, so with Maine, when you're looking at your Maine income tax, your estimated income tax, we have the Easy Pay, right? And this is what the Easy Pay site looks like. Again, you can see with the register button, you have to set up an account to use the system. So again, don't wait until the last day. If you're watching this because you're hoping to get prepped for that first payment in April 19th coming up in a week or so, then you want to get on this and register today so you're ready for that payment. So I know when I need to pay, I know how I need to pay, but as with many of you watching right now, how much do I pay, right? That's the big question I get is I would love to pay estimated taxes. I just have no idea how much. So things to remember about how much. Payments are supposed to be equal across the periods, right? So there are instances where you could overpay in one period and underpay in another period. It sounds really bizarre. Your total would come out fine, but all of a sudden you get this underpayment penalty for a period because you didn't pay equal amounts across the periods, and they figured that one period was too short or too small of a payment. So you want to try to be as equal as possible. Now, with that being said, there are worksheets that the government has created, the 1040-ES and the 1040-ES-ME for the federal and for the Maine, to help you calculate how much you think you're going to owe. Now, we're not going to go through those worksheets. You can, there's going to be links at the very end to go through the worksheet if you would like, but there's another method that I prefer much more than those worksheets, and we'll get to that. Now, if your income is uneven across the year, so you're a seasonal business, then you can use something called the annualized income installment method, Form 2210. So this method is for those truly seasonal businesses where, 90% of their income is in the summer or the winter, we're in Maine, and it's a burden for them to try to make equal payments, especially in the off season, right? So there is a way that you can try to line up your payments more in line with how your income comes in. I do have 2 additional slides. If we get time, we can go through those. Or if you're a seasonal business and you want to talk more about it, then that's definitely request advising. We can talk about it. But just want to put it out there that there is a way. Okay. Estimate. You're going to be working off an estimate. So this is another reason why I always tell my clients, I don't care what system you have, you should be tracking your revenues and you should be tracking your expenses. Because the more you understand about your revenues and expenses, whether it be in QuickBooks or Wave accounting or any other kind of system you might have out there, you are going to have to be doing an estimate if you're properly preparing, whether it be estimated taxes and or your business in general. You're going to have to be doing estimates and get familiar and comfortable with estimates in order to help you with your business, right? So it's not going to be perfect. You're not going to pay exactly your tax bill unless you have a very predictable business. You're going to have to be a little familiar with estimates when you're looking at how much. Filing a joint tax return. So a lot of you out there might have a partner that works while you are doing the business. Or vice versa, maybe. There is a benefit and a drawback to those who are joint tax returns, okay? The benefit is if your partner or you are an employee, you can have your employer withhold an additional taxes for you that can pay the withholding, the estimated taxes that your business is going to do, right? So that's what my wife and I do. My wife has a business and I'm an employee. So on my W-4, I have them withhold extra federal taxes and extra state taxes, and that covers my estimated taxes for my wife, right? I do that calculation, I change my W-4, and my employer is the one that has to make the payments for you. So if you're filing a joint tax return, IRS is A-okay with that method of having the employer file the taxes for you. But again, only works if you have, or you're an employee, or you have a partner that's an employee and you're filing a joint return. The drawbacks are you're essentially having to estimate taxes for all your income, and that's a little tricky to understand. So I try to kind of have a slide here about it. So when we're talking about income tax, especially, income tax is on a tax bracket level based on how much you are making, right? If you make a little, you don't pay as much. So this 0 to 19,900 for married, you pay 10%. And then once you make $1 over 19,901, that extra $1 is charged at 12%, while the remaining is just 10%, right? So the more you make, the higher the tax bracket will go. So when you have two people, when you're joint filing, you have two people working, taxpayer one maybe makes 50,000 and taxpayer two makes 30,000. So you have a total of $80,000 in this example. Well, who's taxed more, right? If you're trying to estimate the taxes for one or the other, how would you do that? You wouldn't want to treat each one like a single filer. So you wouldn't want to start at zero for either one when you're estimating the taxes. This is where I get a lot of people that get confused about estimated taxes. So what I usually tell people is pick a base taxpayer, right? And then understand that the second taxpayer is not starting at zero. So that base taxpayer is the one, and usually I advise to pick whoever is the employee, because the employee is already having their taxes withheld based on that estimate that they are the only person working, right, in the home. So they're already having that estimate being done for them by the employer and being paid. So have that person be the base, and then wherever their income stops, that is where your business income is going to pick up. So if that puts you up into the 12% or 22% bracket, you got to remember your earnings is not starting at that 10% bracket possibly, because your other taxpayer one has already brought you above and beyond that bracket. So again, pick a base taxpayer of, okay, who do we want to be the one that starts at zero, and then figure out where their ends. And again, usually the employee, they know what their pay is going to be. It's pretty regular. So the base taxpayer tends to be them. And then whoever is not the base taxpayer, usually the business, they're going to start wherever that base leaves off as far as estimating the tax rate, right? Now, better trick versus the 1040 ES, or even trying to estimate it yourself based on the tax tables. Use a computer program, right? Now, this is not an endorsement by any stretch of the imagination, but this is a good one that I found online, right? Interestingly enough, this one was created for people who use Uber and Lyft, and they had not been paying their estimated taxes. So this was created for them specifically, but it works beautifully for anyone, right? So when you get there, you have this kind of choice. You can kind of say, okay, I'm married and I have $50,000 in self-employment income. I don't find this, this particular calculation to be very useful because it doesn't gather enough information, right? They have this little blurb based on the calculation, blah, blah, blah. So instead of that, if you decide to use this website, I would go here to the Advanced Estimated Payment Calculator. It's going to get you a very similar menu option, right? Let's say married filing together. We're going to do that example that I had, the 50 and the 30. We hit the next button. We go a few screens in. It's going to ask you some questions to try to understand your situation. And then it comes up with, okay, my household income comprises what? Well, it comprises self-employment income and wage income. Great, And once I input that information, at the end, you're going to get this report, right? And this report, again, I'm using that example of the 50 and the 30. I put that into it, and the 50 was an employee and the 30 was a business. That made up the $80,000, and that gave me, okay, based on your situation that you gave us, this is the tax liability before any kind of credits, right? So my taxes will be $9,508 for federal taxes, right? And then up here, I had put in that the wage earner had been having taxes withheld, the $4,138. So that tells me, okay, there's a liability of $5,370, and up the top here, it tells me you're going to need to make 4 payments of this. Now, again, if you've already missed a payment, but these numbers are all true, then it might be 3 payments. You might have to do your own calculations, right? They're basing this off of you having 4 payments. So do be aware of that. But this particular website, as I said, much easier. Why crank all the numbers? If you're a glutton for punishment, you want to crank the numbers, you want to do it, great. You want to understand it, awesome. There's that worksheet, the 1040 ES. If you are not a glutton for punishment, you just need to know what you think you're going to owe, then by all means, there's this site, there's other sites. So there's certainly different sites that you can use. In the state income tax, same thing. Use the computer as a tool, right? This is another tool that I found pretty easily that I liked. This I just used for state income tax because, and this is at the bottom here, you have to be careful. A lot of tax estimators you find online assume that you are an employee, not self-employed. So remember that federal tax calculator I found, I specifically was looking for one that you could differentiate wage income from self-employment income. And that gave me my proper taxes. So when you're looking, either use the ones, again, not an endorsement, just ones I found to be helpful. And you can, using those, you can calculate your state income tax, you can calculate your federal estimated taxes using the computers. Now, are there any exceptions where you wouldn't have to pay, other than the 3 questions, if you answer those 3 questions at the beginning, are there other exceptions out there? So the IRS is willing to waive the underpayment penalties if you became disabled, right? And regardless of say any of these things that I mentioned coming up, you need to have proper documentation in the event the IRS does ask, right? So one of the exceptions is you became disabled. Another one is you're at least 62 and you ended up retiring. Again, documentation to show that you retired. Another one, experienced a casualty, disaster, or other unusual circumstance, right? So again, so it happens, right? It happens, folks. Maybe, unfortunately, your house burned down. Okay, show the IRS your house burned down, some kind of documentation, then they're human beings too. They're going to help you waive the underpayment penalties, right? There's a reasonable, and that's what the IRS loves to use, is reasonable is their favorite word. There's a reasonable reason why you are not paying the estimated tax when you should, right? The last one isn't really kind of like like the others. It's if you do get an underpayment penalty, and it's the first time you've had a penalty either in 3 years, or it's the first time that you've encountered this penalty ever. So it's the first time you're doing estimated taxes ever for your business. Then there's something called the first time penalty abatement waiver. And you would be able to call the IRS and you can talk to someone and you mention this. You have to mention this term, first time penalty abatement waiver. That, hey, you kind of fall on your sword. Sorry, didn't realize I was late on the payment, didn't realize I was under the payment or whatnot. Can you waive this first one? If it's the first time or you haven't had a penalty in 3 years, they will waive the penalty, but then you're put on a list for the next 3 years, right? Of, hey, no waivers next time. So this truly is kind of your final effort to get out of a penalty if you do have a penalty. So in summary, and I know I talk fast, so I apologize, people. I just want to leave some good time for questions. So first off, we got to understand what estimated taxes are, then when and how to pay. So the dates and the actual place to make those payments. Again, everything's online these days. How much to pay, which was a little hard because you did have those worksheets that I mentioned, but otherwise, why not use these websites that are out there, right? The websites aren't asking you to put in any classifying information like your name. It's just asking you for information to understand your situation so it can better understand the taxes you pay. Again, the 2 sites I showed, great for federal and state estimations. And then lastly, we want to make sure we pay on time in an equal amount as best as we can. Remember, reasonable. Was it reasonable to think that that was the equal amount, and does it meet the parameters of the questions that we had in the beginning? So here are a bunch of resources, again, that I came up with, the 1040 ES instructions and the 1040 ES ME. So one's the federal and one's the state of Maine. I, again, have that federal tax calculator that I like, and I have a whole list on the annualized income installment method, how to do that. Again, I have a couple more slides, so if questions are pretty slow, I have some time to go through the annualized income installment. That's when your income is not equal throughout the year. You have like a seasonal job. And of course, the IRS publications that we all love. So let me stop, take a breath, and we have a good 20 minutes to go over some questions. And as I said, if the questions are slow, then we can, of course, I'll put up the 2 slides that go more into the annualized income installment method. So you're going to get a copy of these slides. So I'm going to stop sharing just so I can pull up the chat on my screen. Okay, on the EFT, on the Jessica Smith, on the EFTPS enrollment page, it says if you are a new business less than a year, you are already pre-enrolled. How do you get the PIN if you are brand new? Jessica and the rest of you, I will look into that because that's the first I've heard of that. When I signed up, because my wife has a business, we did not get that same message. We had to enroll and we got the PIN in the mail. So let me research that today and I will get that to Kelsey, who is going to be sending you the slides and the link to the recording. She might, because it's late in the day and the computer has to crank on this video, she might do that tomorrow, but I'll get that answer tonight. Okay. Again, that is the first time I've heard of a pre-enrollment from EFTPS, but that is interesting. Any other questions coming up? Again, the hardest thing is that estimating what you think you're going to make as a business. And again, when you're putting money into the estimates, they're usually talking about your profits, not your sales. So a lot of people think, oh, sales. So now you're not just estimating sales, but you're also estimating your expenses to get to your profit that you're going to be taxed on. So it's one of the reasons you see, if you ever see a company suddenly buy like a new vehicle at the end of the year, that's what they're doing. They're probably estimated their expenses to be a little higher and they're trying to get them higher to meet that expectation, or they're trying to reduce their tax liability.
I don't know if it's okay to ask a question not in the chat. I figured it was easier if I explained verbally rather than in writing.
Sure, yeah.
How do you estimate taxes with a business that is so dependent on customer purchases and cost of lumber, for instance, is going up in a huge amount?
Oh God. Oh.
Yeah, how do you even begin, I guess? And we're really new at this, so I might need to attend another webinar before this one to fully grasp everything. But how do you begin to even estimate something like that?
Or even have an advising session with me, and then we can talk
Definitely.
for a whole hour or more about it. So in an industry in which the costs like lumber right now are going crazy, there's no good answer. It's an estimate, right? And so if the first year is the hardest, because the first year is truly you're estimating it, right? And you're brand new to it, it stinks. Once you get past that first full year, then you can rely on that past year to make your payments coming up, right? So once you get that first full year, then you can use that 100% or 110% of the last year to make those estimated payments into the future. But for that first year, when you're first into it, unless your tax liability is under that $1,000, then estimating taxes, you're hoping to hit that 90% mark, right? But there's no special rules or anything like that. As I said, the only saving grace is if you had a seasonal business, which lumber, I don't know how seasonal it is. It seems like now everyone's building like crazy all the time. But if it was a seasonal business, then you could try to rely on that annualized income method, which I can certainly pull up the slides in a second here. But for your business, if it's more of, okay, it's just crazy all the time because prices are fluctuating and customer orders are being put in or being canceled or changed or whatever, it's just a really hard business to estimate, right? And so you're trying to hit that 90% of what you might owe to fall into that, what we call a safe harbor. Or, as I said, when you get that full year under you, you can just do the 100 or the 110%, depending on where your adjusted gross income lies, to do the future payments, which gets easier. Or if you're really new and you have a lot of expenses, the price goes way crazy, then you're hoping you fall under that $1,000 for tax liability at the end of the year. But so not a good answer. No magic bullet for you. It's,
fine.
as I said, you should be tracking very closely your progress through QuickBooks, through Wave Accounting is a free option if you don't want to pay for QuickBooks. You should be tracking that so that you can then start making estimates. Like, okay, I see how this month went and this month and this month. So what do I think the next month? You know, is there, if you're new at it, there's gonna be no rhyme or reason. If you can pull on a couple years worth of data, then you might have a better historical thing to make better estimates at.
Okay. Thank you so much. I appreciate it.
Yeah, of course. Remember, Crest Advising if you want to talk more. I'm probably one of the only ones that get excited about taxes, so right. Okay, here we go. We got a couple here. I'll start with Debbie Standard. If my business is a part-time consulting one and I'm a full-time employee, would it be better to have my employer withhold my taxes? That is a personal option for you. So basically there's no right or wrong on that particular question. Me just wanting to make it easy for myself, I would just have my employer withhold more taxes on my paycheck and have them do all the legwork of making the payment. But that's just me. You can do both. You could have the employer withhold just the normal taxes and then do your estimated taxes on your consulting business, or you could mix and match, right? The nice news about the employer side, so if you tell your employer, hey, withhold this much taxes, it is considered an equal on-time payment at any point in the year, right? So let me explain that. So if you get to December and you say, oh my goodness, I have not paid nearly enough, and you have the luxury of having an employer, whether it be your partner or you can quickly change your W-4 for the end of the year and say, hey, withhold my entire paycheck, right? And the IRS does not see the time schedule that your employer is making payments, because they're just doing it on their own schedule, usually monthly. So that counts as on-time payments if you do it through your employer. If you do it through the EFTPS, there's an obvious trace of when you made the payments and how much you made. So that may be a little benefit to tweaking the system using the employer method. Not everyone has that option, but if you do, certainly it's one you can use. Lindsay, what if you think you are going to be under the 1,000 taxes, but end up being over? So this does happen every now and then. And I ask accountants, what happens? Like, does the IRS come out and put you in jail when you don't pay estimated taxes? Is there like a big army waiting for you? No. So you might get a penalty letter, and the penalty is going to be based on how much taxes you owe. And I often ask the accountant, well, how much do you think it's going to be? And they often tell me the average that they see is anywhere between 150 to 350 for a penalty, right? So it's not the end of the world, but if that happens, remember, you have that first-time taxpayer abatement. So you call up the IRS and you mention that phrase, first-time taxpayer abatement. You say, hey, I'm so sorry. I thought I was going to be, it's reasonable. Remember, reasonable for IRS. I thought it was reasonable to think I was going to be under $1,000. This is the first time I was doing it. I ended up being over. I'm so sorry. First-time taxpayer abatement. Got to say the words. It's like magic words. And then it falls into the special program where they can waive that fee. So for that, hopefully, did I just give me like a thanks or thumbs up if that's as much as you want me to go into that question, or okay, good. Sally, if you have two different businesses, does this remain the same? As far as estimated taxes, yes, but remember the problem with the joint tax filing? So you have to layer the income, right? So one business might be taxed at a certain bracket while the other business is going to, and there's no right or wrong which business is first or second. You got to choose one to be taxed at the first bracket and the second one taxed at the upper brackets, right? So that's the biggest thing is when we're talking income, we're talking if you're just you, if you have multiple businesses, then it's all those incomes put together for estimated taxes. If it's a joint filing, then it's all the income in the household being on that tax form being put together. So there's going to be a difference in the amount of taxes, even though it's the same 30,000 that your business earned, is because that 30,000 is being put on top of whatever you've already earned, right? So if one business earns 40, one business earns 30, that 30 is going to be taxed at a higher rate when you're looking at those estimated taxes. You know? And please, if I answer your question, please tell me, because I tend to beat a dead horse like crazy. So I don't mean to, it just happens. Did that answer the question, Sally? Oh, Sally, another part of the question. Yes, my email, by the way, if you want to email me, is probably on your screen on my picture here at the bottom. So you can email me directly, perfectly okay to email me. Or as I said, if you find later you want to register for advising, certainly go to our website, hit that register button. Because the other thing, Sally, that we'd want to talk about is if you have two different businesses, would you want to get two different accounts to make sure that you made those payments separately? So one of the questions would be, are those sole proprietor businesses versus LLC versus corporations, stuff like that. So definitely email me and we can talk more about that. Typically, when it comes to bank accounts and EFTPS accounts or anything like that, each business should have its own, so it has a very clear set of records, right? One EFTPS account is going to be signed up with one business banking account, which is different than your other business, which should have a separate bank account from that other one, right? So again, dead horse, and I'm just beating that thing. While we have time, because I see the questions have slowed down, I think I got them all. Let me consulting. Yeah, I think I got them all so far. Let me pull up, and I don't mean to confuse people. I'm going to pull up those slides on the, let me see here. I'm going to find the right one here. You will have these slides, by the way. They will all be sent to you. Of course, my slides just left. I'm looking, no more questions. Let's pull up that estimated taxes. We're gonna go down to the bottom. Of course, you guys, I'm narrating, but you guys can't see or do any of this. Current slide. And I'm gonna share my screen. Okay. So very quickly, the annualized income installment payments. So this is for the people who didn't want to make or couldn't make equal payments throughout the year. So again, not wanting to go, this is like, you definitely want to reach out to me because it gets a little complicated. But basically, same thing as before, they break it up over certain periods. So they break up the period over the year over certain periods. And if you notice, each one of the periods begins January 1st. So it isn't periods like you had with your regular estimated taxes. It's January 1st to March 31st, January 1st to May 31st, January 1st to August 31st, right? So what you're doing is you break it up over periods and you try to figure out what your income was during each period, because during each period, you're going to multiply that income by some kind of multiple, right? For the first period, you multiply it by 4, then 2.4, then 1.5, and then 1 for that last period. Remember, the last period is January to December, so that is what you made for the year. So once you break it up into the different periods, that will then match your income. Let me show you on this slide. So period A, let's say you're a winter business, right? And you do most of your sales in the fall and the winter. So period 1, in this one, period A, we made $20,000. It's January till or March, right? We made our most money. So we're gonna times it by 4 to get $80,000 annualized, and we're gonna make an estimated payment based on that. Then period B, we only made 5,000. So again, we add the 20 plus the 5 because we're doing from January 1st to the end of the period, and that's multiplied by 2.4. So you can see that's the income has come down now. So we're making a less of a payment in period B, but it's still covering all of our tax liability. Period C, make even less money because it's summer, no one's buying our winter stuff. So again, we add it all up, times it by 1.5, and now the tax that we're paying, it comes down even further based on our income. Period D goes back up because now we're getting back into the fall, back into the winter, back into our season. So you can see from period C to period D, the tax actually goes up a little bit, right? So there is a way, if you're seasonal, as I said, you might want to talk to me separately. There is a way that you can make unequal payments if you're truly seasonal. Now, if you're not seasonal, then you're going to want to make the equal payments if you can. Again, don't mean to confuse people. I know when you get a lot of stuff on the screen, it's like, oh my God. But YouTube is a great thing where you can hit pause, scream, then press play again, and you got it, right? Or, as I said, and I keep saying, because I beat the dead horse, is sign up for advising, right? If you go online and you're searching and it's just getting confusing in your head, that's a perfect time to call us up and say, hey, I just need to bounce this off people because I think I got it, but I want to make sure I got it because, you know, it's important. Without crossing that line of tax and legal advice. Any other final questions? I feel the questions have kind of stalled out. Usually I try to do some kind of tax pun at this point, but I couldn't think of one.
That's the most surprising part of today is that you couldn't think of a tax pun. So in case you didn't notice, Peter is one of those people that gets very excited talking about taxes and numbers. And we understand that business owners often started their business because they like to do something very different than numbers. So our business advisors are a great addition to that team, so to speak, for your business. And so, like Peter said, I will send out a follow-up email probably later today or early tomorrow. I will include the slides and a link to the recording and a link to request advising, as well as Peter's email. So all of those things that were mentioned will just be clickable in my email. We're getting lots of thank yous in the chat, which we always love to see. And yeah, we love to see people joining webinars and then realizing that we're real people. You can talk to us. So thank you all for joining us today.
Yes, and I will look up on that EFTPS pre-enrollment question. And that'll be part of it. I can
send you a screenshot if that helps, or the link that I saw, and if that works, I can email you the link that it brought me to. I might be in the wrong place, it's possible, but it said something about enrolling and click this link, so I did, and then it brought me to that. So
okay, yeah, send that to me. That'd be good. And side note, people, the IRS will never get in the way of you and paying taxes. So you'll never have to pay unless you're using your credit card or digital wallet. But otherwise, the IRS will not put a barrier up for you to pay taxes. You don't have the excuse of I couldn't afford it, right? Okay, so I will stay on just briefly. Thank you again. I know estimated taxes is not high on my list of fun things to do in a day, but you guys made it a priority, so thank you. Hopefully my goal is to move that needle of 60% doing it wrong to 60% doing it right. That's my first goal in Maine anyway. I'm not going to conquer the nation, no way. Nope. But Maine is where I'm looking for. Thank you everyone for coming in.